Welcome back to Newsday. It's time now for business news. European markets are mixed as the prospect of higher for longer interest rates emerging from a slew of central bank decisions this week continues to weigh on sentiment. Asia-Pacific markets lead, ending the day also mixed as the Bank of Japan left its monetary policy unchanged after its latest meeting. And in the U.S., markets are cautiously higher. Later in the day, we will get the preliminary September Purchasing Managers Index data, even as the Federal Reserve revised its GDP growth forecast for the year to 2.1% from the 1% previously forecasted in June. Many are also observing how the wave of technology initial public offerings with strong opening prices is settling and what it means going forward. Arise business analyst Bode Ososami is here with us as the U.S. markets open. Bode, thanks so much for joining us on Newsday. As the week ends, it's a good day to talk about how the technology IPOs fared and what we're learning. What do you say?
Well, it's been a roller coaster. I would say that is the best word I would use to describe the markets and even the IPO performance when we consider these major companies, Instacart, Arm Holdings, and Klaviyo. But first, let's see how markets are opening. Nasdaq is positive 0.42%. Dow 30 is down 0.06%. S&P 500 is also positive 0.23%. So it's looking mixed, just like we've seen in European markets, where the FTSE 100 is positive, up 0.66%. DAX is down 0.02%. CAC is down 0.42%. And Shanghai Composite up 1.55%, while Hang Seng is up 2.4%. Nikkei is down 0.52%. On corporate news, news that came in that I think is with potential to move markets, the United Auto Workers Union has threatened to expand its strike against the big three automakers, General Motors, Stellantis, and Ford. They were supposed to have come to some agreement. I haven't heard anything in terms of whether an agreement has been achieved. And the expanded strike was supposed to kick off today. If you look at General Motors, their shares are up 1.19%. Ford is up 2.38%. Stellantis is up 0.91%. That may be an indication that markets think this is something that they will be able to handle. But going on to markets, I can see all the indices are now in positive territory. Nasdaq is up 0.48%. Dow is up 0.03, 0.11%. And S&P 500 is up 0.29%. But some good news for markets. Microsoft's acquisition of Activision Blizzard. Activision Blizzard is up 1.87%. But I understand that deal is closer to being cleared by UK regulators. And we also gather that Amazon intends to add advertising to Prime Video next year. So I think that's something that I guess is going to be another income stream for that major player. Amazon today is up 1.56%. The reaction of traders to Arm Holdings, they opened at $51. They're just $51.90, just 90 cents above opening price. They actually went under opening price, I believe, on Thursday. Klaviyo opened at $30. And I can see that Klaviyo is $34.15. They're doing a bit better percentage-wise. And Instacart, that's the online grocer, also opened at $30. Instacart is $30.83, just barely above opening price, despite the fact that if you look at both Instacart and Arm Holdings, at opening, the prices of their stocks soared over 30, I think 25% for Arm Holdings, and as much as 30 to even 40% for Instacart. But all that has faded, which just tells you that the prospectus and the hype around the opening does have an impact, especially when you see big players putting down their money, like BlackRock being behind many of these deals. But after that, I think it's now for the fundamentals to be scrutinized. And of course, we know we're also in a high interest rate environment, which poses additional headwinds, especially for the tech sector. And the market, of course, is seeing a lot of disruption in this new technology space. And you can't be sure who will be the winners. What we are seeing is that the wave that took almost all the technology stocks up in the first half is calming, and many stocks are looking bubbled, and traders are looking for excuses to sell. And like I also said earlier in the earlier show, ARM Holdings do have some competitive advantage in the sense that they lead in this licensing of designing chips. And although they don't produce the chips, but they design the chips and they license the production out, and they're a major leader there. But many are saying that it'll be difficult for them to sustain their competitive advantage. They're also vulnerable to China. The same thing with many of these other players. Kia, Vigo, they are a major marketing software company. The leader, the CEO, he said, I think it was yesterday, that AI is key to their strategy. But I think the bottom line is that the markets want to understand a little bit more. And people are not routinely renewing digital subscriptions. There's a lot of pressure on wallets. So my sense is a lot of rethinking now that everything is being done to leverage AI, metaverse, quantum computing, robotics. Nobody knows how all this is eventually going to land, but we know that it's going to be a completely different landscape. Even the challenge of high inflation and less disposable income is also an opportunity for fresh innovation. So I suspect you are going to see some surprise winners, new winners. Just like I said, markets are looking, well, positive since initially starting mixed. I can say it's now mixed again. Dow is in negative territory, down 0.03%. Nasdaq is up 0.34%. Dow switched back to positive 0.02%. I think that the market is really finding a level. It's going from mixed to just barely positive.
Well, thank you, Bode. And as usual, hold on with us just for a few moments as we take on some more stories and come back to you shortly. UK consumer confidence increased for the second consecutive month in September to the highest level since January 2022, supported by strong wage growth and easing inflation. The Consumer Confidence Index, a measure of how people view their personal finances and broader economic prospects, rose 4 points to -21 in September, up from a record low of -49 in September of 2022, and the best reading in 20 months. The reading was also much better than the drop from August's -25.
British retail sales partially recovered in August after a rainy July washout, official figures showed on Friday, adding to signs that the country's consumers were mostly coping with the cost of living squeeze. Sales volumes rose by 0.4% on a month-on-month basis after a sharp 1.1% fall in July, the Office for National Statistics revealed. Analysts had forecast a slightly stronger 0.5% rise in August.
And Japan's private sector activity expanded at its slowest pace since February as the flash composite PMI for Japan in September stood at 51.8, down from August figure of 52.6. Manufacturing PMI showed a faster contraction at 48.6 compared with 48.9 in August, when services PMI came in at 53.3 for September, a softer expansion than the 54.3 in the month before.
Alphabet-owned Google may stop supplying artificial intelligence chips to Broadcom as early as 2027, caused the company's shares to decline 5% in pre-market trade. If that occurs, Google will design the so-called Tensor Processing Unit, TPU chips internally, according to reports, which also states that executives set a goal earlier this year to terminate ties with Broadcom after a dispute over the price Broadcom was charging for the TPUs.
And still on artificial intelligence, technology giants are seeing chatbots everywhere, including in your inbox and office tools. Google and Amazon have announced a slew of new AI offerings this week, And Microsoft is also following suit as it announced a more integrated Copilot AI companion that will work throughout its products and services, including Bing, the Edge browser, its office productivity software, and Windows. A flurry of announcements by tech giants this week reveals how they are racing to dominate one of the most transformative technologies in decades.
Microsoft Core got a huge boost in its attempt to clear the final global regulatory hurdle for the $69 billion Activision Blizzard Inc. deal after the UK's antitrust watchdog said the revised deal offer from the tech giant appeared to address its concerns. Microsoft's proposal increases the likelihood that the acquisition will be approved, despite the Competition and Market Authority's announcement today that it will consult further on the revised offer. Well, for more on these stories, let's now cross back live to London, where Arise business analyst Bode Ososami is standing by. Well, Bode, Japan expectedly held its benchmark rate looking at the week, which was busy for central banks. Well, help us recap how it all went down.
Yes, thank you again, Tokpai, for having me. Like you said, the Bank of Japan held its rate unchanged. That's what was expected. And they also said the economy is recovering moderately, and inflation expectations are showing renewed signs of accelerating. Governor Kazuo Ueda is yet to be fully convinced that the wage growth pressures that they're seeing in the data are creating a demand pull on prices, and so thinks inflation is still more manageable, driven by elevated costs, of course, worsened by a depreciating yen. Japan has had negative interest rates since early 2016. But perhaps not for long, as they continue to watch financial and forex markets and the impact on economic activity and prices. But apart from Japan, we've learned a lot. In the two largest global economies, there's still a lot of uncertainty, despite optimism about the near-term economy. Both China and US are more positive about 2023 growth, more so in the US, where the growth forecasts for 2023 were doubled by the Fed only the last meeting. But of course, in China, they're still beset by a myriad of issues. But in the US, higher rates for longer and expectation of stickiness in inflation driven by wage growth and high energy costs means lower valuations. Since profits are worth less in today's, future profits are going to be worth less in today's dollars. So this so-called higher for longer mantra is also the official stance of the European Central Bank, and the Bank of England, Norway, Taiwan central banks also in sync. The Bank of England is also focusing on recession risk as inflation recedes. They're trying to be careful so that the economy, which we'll talk about soon, is really going through its challenges. So you see the same approach in South Africa and Egypt, where they're also watching recession risk as they see inflation looking a bit more manageable. The big question, of course, is when will rates begin to come down in the UK? The other thing we are seeing is divergence in the economic vulnerability between Europe and the US. It's becoming more glaring as the impact of higher energy costs and lingering political crisis in Ukraine lingers. So the other issues, geopolitical rifts and trade tensions aren't, of course, helping conditions. It can't be all about monetary policy. And in South Africa, the Reserve Bank governor, he said the government must help combat inflation by exercising more fiscal restraints, which could entail spending curbs and plugging leakages. In short, the context drives the appropriate monetary strategy. The times are very dynamic, very difficult to predict what's going to happen next. So it's really, as far as I see it, a month-to-month scenario.
All right, and AI, it's transforming lives, but where are the major shifts and drivers as we see in tech? The giants, they're all jostling to stay ahead as we're seeing now.
Well, indeed, transformation is the word. And some of the shifts we are seeing, companies are looking for new performance frontiers, reinventing themselves to stay well ahead of competition. New levels of creativity as businesses are unlocking new possibilities with data, technology, and talent. And we're seeing new technologically enhanced experiences, either from digital layers on the real world to totally virtual environments. We're seeing new technological innovations pushing the boundaries, embracing disruption, harnessing quantum computing, generative AI, Web3, robotics, and 5G. Just as many were saying the glory days of e-commerce, payments, or digital advertising was all over, we suddenly find ourselves in the era of AI, creating another leg of growth for the economy and for companies. Only today, major drug makers announced the application of AI to find patients for clinical trials quickly. So they're now able to speed up drug development and potentially saving millions of dollars. While we see companies facing potential disruption, investing hurriedly in an AI roadmap to avoid being disintermediated, I think the long-term winners in this space will be those who are able to encircle the market leaders on several fronts to break their grip on the market with completely new ideas. Google, for example, just like you said, putting its bad chatbot in Gmail, Google Doc. Microsoft yesterday announced a new AI tool, but that still looks to me like latching AI on old tricks to defend the old turfs, while the experts are saying what we're likely to see is not incremental adjustments, but transformed landscapes. Let me just give a brief description of what the new world is likely to be like. Today, we live in two different worlds. The physical, for example, you go to a bank, or the digital, we are online. We either visit the mall or we enter a web page. In the new world, the physical and the digital will be so intertwined. There will be this seamless combination that it would be difficult to know which is which by the time you go through it. For example, in your car, in 2030, it will not just be electric, it will not just be driverless, it will adjust temperature and humidity to suit you, it will entertain you, confirm if you're going to the office or going to play golf, lets you hear the news exactly when you want it, even make you coffee if it knows that that's what you typically want while you're in the car. So you don't need to own the car. It's more about mobility services and transforming mobility experience in a way that is absolutely seamless. So things are moving very, very quickly. And I think this experience is something that Africa shouldn't be left behind.
Well, but how should African economies be positioning for the new digital economy?
Well, first, we can't address technology issues without considering other parts of the economy. Technology blossoms as it enables other growing sectors or as it complements other growing sectors. We have to think outside the box, and we need definitely leadership to escape some of the crippling paradigms. For example, we produce raw materials and consume almost everything else. We need a Marshall Plan to produce and export things the world needs to jumpstart manufacture of critical industrial components. And we have vast untapped domestic markets. Let me just give examples. Deepening the value we add in the supply chain, or we will be enslaved by paying far more for value added elsewhere. So we have to produce electric batteries and not just mine and export lithium. We have to see also a technology-enabled future and progress a strategy to reskill our youths adequately to bridge the skill gaps for the future. And it's all about people. If people are hungry, if they don't have good health care, if they don't have safety nets, they can't innovate anything. You have to create that environment that people feel, of course, part of the country, and they feel motivated and incentivized to innovate. A lot can be done to incentivize innovation, incentivize research and development, support technology entrepreneurs, create the right environment. And for the business environment, it must not just be right, but it has to be ahead of our peers in its attractiveness and incentiveness. So there's one very good thing, though. We know from what young Africans are achieving all over the world, we have a growing young demography waiting to be properly supported and properly directed. And I think they are the hope for the future.
Well, but they are the first on the PMIs for September in the UK and Europe. As we get close to the third quarter of the year, what's the data saying about all of this today?
Well, it does seem like it's not looking so good. For Germany, the manufacturing sector saw some recovery in September, while the services sector downturn eased, but all the indices in the first readings in September remained in contraction territory. This month's index is also its highest in 3 months. So there has been improvement. For Europe, the Eurozone composite PMI that came out today rose to 47.1 in September 2023, a marginal increase from August's 34-month low. And it slightly surpassed market expectations of 46.5, but we still saw business environment dipping to its lowest level since November of last year. Also in the UK, we had a bit of good news. Retail sales in the UK rose by 0.4% from the previous month in August 2023, after falling 1.1% in July. Then there was a lot of very, very bad weather, which of course reduced supermarket sales, clothing sales, and so on. But as to PMIs, UK PMIs declined further in both services sector, deeper into contraction. Manufacturing PMI was just 44.2 in September 2023 from 43 in August. Yes, slightly better, also better than forecast of 43, but still in contraction. So we're beginning to see recession risk raising its head again. We just got 5 minutes ago, the US S&P Global Composite PMI came up at 50.1, which is slightly lower than 50.2 last month. That was in August. We also saw the manufacturing PMI for September coming out at 48, higher than 47.9, and the services PMI up 50.2. It's lower than 50.6 that was expected, also lower than 50.5 last month. But you can see that the US is doing better. At least it's in expansion.